Hi guys and welcome back to Yashi. Today with another CPI inflation forecast. What we normally do once a month before the next CPI report, which is the inflation report. We normally get mid-month of the next month for the prior month. I always tend to make these videos here to check some data that we have, more up-to-date data, to try to make a forecast on what to expect on the next CPI report. This is good because it gives you some extra insights about what is happening. It also shows you the flaws of the government, let's say, CPI report. And we have some flaws today in this report, in this video today too. And it can help you also in gaining more knowledge on what to expect, maybe how to react. This video is not financial advice. It is based on what I see on the internet, my interpretation of stuff. I'm not a financial advisor and I'm not a magician. I definitely cannot forecast, but I can read some data. So let's get started here. This next report will be very interesting. The last report we looked at was very negative after 4 months of beating expectations, going better than expected, and seeing a Powell that was very strong. The January report came out and we saw stagnation in inflation. It's not stagflation because stagflation is for a longer time, but for the first time in 4 consecutive months of positivity, we saw some more stagnant inflation. Now, we saw gas prices going up, which affected many other things. We saw the egg prices exploding. Eggs are fundamental. Everybody buys them. We still saw some things decreasing in price, but the impact was not as strong. Fact is, gas prices were going up. We had China who started unraveling the demand again as it's opening up. However, it seems that stuff is stabilizing once again. Let's get started here with what we had. This is the January report. All items, we have a 6.4 inflation. This is from January. 6.4 inflation compared to last year. It's not the 9.5% we saw in mid-2022. If we do not take into concern energy prices, which fluctuate much more, inflation was at 5.6%. We're gonna start with the energy side, energy commodities. Gasoline, fuel and oil went up towards December, January. And if we look at energy services such as natural gas, it was still up from December, was coming down, but the effect was not as strong. Let's start out with gas prices. These are the gas prices today. $3.4 is today's price, which is lower compared to last month, by not a lot, and it is much lower compared to a year ago. So we know that in the next report, we could expect still a positive, let's say, number, a deflationary number in terms of gas prices. Even though gas prices are not considered directly by the Fed for their inflation stuff, because it fluctuates much more, it is dependent upon world demand, not only the US demand. Fact is, prices here are looking better and good in terms of inflation as they're lower compared to a month ago. So this could affect the next CPI report positively with a negative or a low positive number. Natural gas. If we look at December of 2022, numbers were very high. Now, numbers here will change because every single index is a little different. The fact is, you will see in all indexes that December number were very high. January were still high, but decreasing. February seems like we were in a very low point, especially if we compare it in the past 3 years. We see that the February numbers were at the same level compared to 2021. Here, if you look at the CPI report, they talk about piped gas. I cannot really find the specifics of this data set here, but I believe that general prices of gas can affect that number there. Again, not financial advice. I'm not an expert on this side here. I'm simply stating what I'm seeing and interpreting it. Let's cancel these two here and let's go into FAO food prices. FAO is the Food and Agriculture Organization of the United States. According to the FAO index in February, so this is the data that could be reflected partially into the February CPI report, food prices are marginally down, 0.6% from January. So we have a 0.6% decrease in food prices compared to January, continuing the downward trend for the 11th consecutive month. So we've been going down in prices since the beginning of 2022. This is good. With the latest decline, the index has fallen 29.9 points, 18.7% from the peak it reached in March 2022. The marginal decline reflected significant drops in price indexes of vegetable oils and dairy, together with the fractionally lower cereals and meat indices, more than offsetting a steep rise in the sugar price index. It doesn't talk directly about eggs. However, I can say from my own perspective, egg prices have been dropping a little bit too. But again, this is my personal experience. I don't know about you. Let me know in the comments if your egg prices have been dropping from the December super increase that we saw because of the whole chicken issue we had. We're gonna go into textiles. Textiles, I'm looking here mostly at world data. Textiles are affected by world data because we import a lot of textiles. It seems that all around, except for some, let's say, exception out there in the world, like Pakistan, textile prices have been pretty stable, with a downward trend if you look on a yearly basis. So will this affect the CPI report? I do not know. Gas prices seem like they will have an effect on the CPI report. Piped gas prices could be lower in the next report. Food prices, according to the FAO, are lower. Textile, we don't really know. Used car prices have been dropping more than 10%. In the past couple of months. They're continuing a downtrend. However, this downtrend has not affected new car prices strongly yet. If we go back on all items on the January report, we're going to go on to services, transportation services. Actually, we're going to go on commodities. Used trucks here, we see a negative 11% drop in prices. New vehicles, on the other hand, are still increasing. Why? We still have a chip shortage, which is affecting production. If we look at the production of automotive, North American assembly plants took another blow from the microchip shortage last week, as 25,000 vehicles had to be axed from factory schedules there. We cannot produce enough cars for the demand that is out there. Even if interest rates are super high, we can see here higher interest rates, meaning consumers are unable or willing to allocate funds to buy vehicles. Interest rates are higher, but there's still a lot of demand for vehicles out there, and that demand cannot be met by supply, as there is this crunch of microchips. The more technologically advanced our cars become, the more we rely on microchips, and there is an issue for our supply. On the other hand, there is plenty of used cars and the inventory is increasing, hence we're seeing a drop in prices. 11% is a lot. So is this a good time to buy a car? Maybe not a new car, but it seems like used cars are dropping in price. So if you're a shrewd negotiator, maybe this is your time to shine. This is not financial advice, but I'm just looking at data. Last but not least, consumer electronics. Consumer electronics have been dropping a lot. I've seen a couple of articles talking about you should not buy groceries, but you should buy electronics. It's kind of a joke on their end. But if we look at numbers, unadjusted price of smartphones fell 23.9% of the year, and the price of televisions fell 13%. Will this be reflected on the CPI report? We don't know how much the effect changed from January to February. The fact is we're seeing a slowdown in demand, so the interest rate hikes of the Fed are having an effect also on this side here. Maybe not on housing, on other things, but definitely on consumer electronics. So generally speaking, in the month of February, looking at some more up-to-date graph data, some articles here and there, it seems like we are seeing a drop in prices from the January situation across many things. Food, which is good, gas, which is good, apparel seems to be stagnant, but it has been dropping for a while. Used cars, which is good. New cars, unfortunately, were still a little bit stagnant there. Housing. I've seen a few reports also from Zillow talking about how the housing issue from a rental perspective already has been fixed partially. We're seeing rentals going down in prices. A lot of people are not renewing their rentals. They're simply jumping from one house to another because jumping to a new house normally comes at a better rate. So we're seeing a drop in rents. Even if the rents will be stagnating, it would have a positive effect on inflation because it would slow inflation. If we're even seeing an inverse trend, the effect is even better because now we have a deflation. In terms of housing prices, on the other hand, as I posted on my last video, how home prices are still stagnant or still on an increasing trajectory because there is no supply. There is lower demand, but there's still no supply. We saw a doubling in interest rates and prices did not really move too much because there's no homes for sale. People that are renting want to get out of it. They want to own, they want to start building wealth. People that own don't want to jump into something new because the interest rates are not really incentivizing them to do so. They locked in 3%, and that is an amazing rate, probably something we won't see for a long time, and so it makes total sense. The fact is, to conclude, it seems to me that across multiple of the factors of the CPI report, which will come out in 1.5 weeks, data seems to be dropping, which is promising, it is good. Maybe it will affect the decision of the Fed because people have been a little bit scared about next rate hikes, a new federal target rate. We'll see about that. Guys, I repeat, this is just my opinion based on stuff that we're looking at online and my interpretation. I'm not a financial advisor. I'm just throwing and putting together what I find around to give you some extra insights. Thank you for watching. If you like what I'm doing, please like and subscribe. And then again, let me know if your eggs are costing more, if you notice a drop too. Ciao ragazzi!